Today, our Finance Minister, Mr. Tito Mboweni, presented his 2021 National Budget speech. Subsequent to his last presentation, he has highlighted the fact that we have mourned the loss of nearly 50,000 South Africans as a result of the COVID-19 pandemic. However, the damages of the pandemic are far deeper than that, as many South Africans have also lost their jobs, and this has taken a serious negative effect on our economy. As a result of this, there has been a great degree of concern in the build-up to the budget speech as to what measures may be implemented to increase tax collections to recover from shortfalls. With regards to the shortfalls, Mr. Mboweni has highlighted that expected revenue collections will be anticipated to be 213 billion rand less than what was budgeted last year, the most significant shortfall on record. However, Treasury has agreed that they cannot take bold steps to increase tax collections, and the indications are that there will be no new tax measures to increase tax collections. This is in the interests of stabilizing our public finances. Now, even though there are no new tax measures to increase tax collections, it doesn't mean that there aren't a range of proposals that will have both positive and negative effects on different areas of the tax revenue collections. Starting off with individuals, there has been the plan to increase the personal income tax marginal brackets by 5%, a rate that is actually in excess of the inflation rate. Now, what this means to the man in the street is that if you earn in excess of the threshold, this will result in an extra 756 Rand in your pocket from the 1st of March 2021. The reduction in collections on individual taxes is being countered with increased collections in the normal excise duties and fuel levies, where there's a proposal to increase the fuel levy by 27 cents per litre. With regards to our excise duties on tobacco and alcohol products, there's a proposed increase of 8%. The good news that comes for corporate taxpayers is that there's a plan to actually reduce the corporate income tax rate by 1%. However, that is not in the short term, and the plan is that this will only be effective for year-ends commencing after 1 April 2022. But you must just be warned that those reductions do come with a plan to broaden the corporate tax base by means of reducing or amending deductions in respect of interest, as well as limitations in respect of assessed losses. There has also been a warning issued to potentially non-compliant taxpayers. Treasury has sought approval for an additional 3 billion rand of funds to be allocated towards SARS. The purpose of this is for SARS to increase its specialized audit and investigative skills to focus on areas such as transfer pricing, base erosion, as well as tax crimes. In addition, a specialized unit is being established that will focus on individuals with high net worth, as well as those with complex tax affairs. Indications are that the first group of audited individuals to be audited have already been identified, and notifications will be sent out in the short term. All in all, a fairly quiet budget when focusing on the tax aspects. But if you have any further questions or concerns regarding implications to you or your business, please, you should make sure that you contact your tax advisor or tax practitioner for further guidance.